Is the market ready for a rally? We have some very important news to discuss today in relation to that. My thoughts on it, and most importantly, what the analysts on Wall Street are saying about our favorite tech stocks, the Mag 7s, and what is happening in the software space as Anthropic becomes a big player in revenues. We'll also look at the fundamentals of these companies and see what is actually happening within the private trading sector and the market growth. But overall, some good news to discuss today and a little bit of scary news. So let's jump right into it by looking at this video by CNBC.
Let's bring in CNBC contributor, Big Technologies, Alex. Alex, good to see you. I saw you here at the exchange yesterday off camera, but let's talk about NVIDIA. It's weird. NVIDIA sort of has to make the case at this point. It's been doing so well that it continues to do well and maybe can do even better. What have you found to be the most notable points out of GTC?
Well, first of all, it just highlights the expectations on this company. Only NVIDIA could tell you that it's going to make $1 trillion on two products or thereabouts over the next 2 years, and people view that as a disappointment. But you have to think about the environment that we're operating in. We're in a world right now where the capex among big tech companies is expected to be about $700 billion this year, up from $400 billion or so last year. And so who knows where it will go in 2027? Maybe it'll be $1 trillion if it keeps up on this pace. So if you're looking at maybe $1.5–2 trillion are being spent over the next couple of years, for NVIDIA to say we're going to walk away with $1 trillion, for people are starting to, they're expressing disappointment about that. But ultimately, I think the business is in really good shape. They are going to capture the lion's share of that CapEx. And as AI continues to accelerate, we were talking yesterday about all the different product uses that are available today that weren't available just a couple of months ago. I think NVIDIA is going to be poised to capitalize there.
For a while, a few months ago, people were excited bidding up NVIDIA stock because of how much folks were buying it. And people were excited about the hyperscalers, Google, Amazon, Microsoft, about how much the potential was for them to grow in AI, even though they were spending a lot. Now there seems to be some lukewarm sense on both. How do you balance the opportunity for the infrastructure makers like NVIDIA, even though NVIDIA is kind of like a singular name there, and the margins against what it means for these big companies that are spending all that money on the infrastructure?
Well, first of all, there was a frenzy in stock buying over the past couple of years where people just saw the growth that NVIDIA was turning in and they wanted to be a part of it. So they ran to it. But right now, we do know that there's a lot of revenue forecasted for NVIDIA, and it has sort of stagnated a little bit over, at least in 2026. So I think there is room to grow there. But as far as where the margins are going to be found, I would argue that even those who are deep within this, whether they're the chip makers, the application builders, the hyperscalers, they're not quite sure. And there is an argument to be made for every single one of these categories that they could be the one that capitalizes the most or they get nothing. Think about model building, for instance. If you're building something as powerful as maybe artificial general intelligence, that should be economically valuable. But if somebody else builds it, can you hoard it? Can you charge a premium over it, or does it commoditize? Same with chips. We're seeing this with the inference conversation around NVIDIA right now. You would think that NVIDIA, as AI gets adopted more, would be in the best position. And I think it probably is. But as we move from training to inference, it's going to have much more competition. So my perspective here is that it is dynamic, it's volatile, it's changing rapidly, and investors are just going to have to hold on to their seats for the time being as we see this shake out.
One of the areas we perhaps don't talk enough.
Exactly. And just like he's saying there, and I might make a full dedicated video on NVIDIA, so let me know if you guys would be interested in that down in the comments below. With NVIDIA, with a $1 trillion basically revenue goal, it's a massive goal. A few years back when we thought basically Elon Musk and Tesla and his companies would be the first to be worth basically $1 trillion. Now we're talking about $1 trillion in revenue, not even the company's value. So it's honestly hard to even comprehend those type of numbers. And if they're taking such a big share of the actual revenue from these bigger projects with CapEx, like they were talking about, $700 billion in CapEx over the next few years, NVIDIA is getting a really big share. That starts to make a lot of sense if you add on their normal revenue growth plus those bigger CapEx projects. But let's continue here.
About is the software for data management that sits in between the infrastructure and the applications, thinking about also how all this data gets stored, the databases that make it suitable for AI, how you manage it, the data lakes, thinking about the likes of Snowflake, Datadog, etc. How do you think about their place in this ecosystem, and maybe their valuations or the amount of conversation there is about them relative to the rest?
Well, I think they're going to be very important. And it goes to this broader conversation around, will software be worth something or will it be worthless as AI takes off? Well, even if you go into an era where you're doing much of your computing within the chatbot, you're still going to need good data to be able to work off of. It's not like all of that's just going to be stored in the memory of ChatGPT, no matter how good it gets. So I think these middle layer companies do play a very important role, and they're not going to be replaced anytime soon. So even though we might...
All right. So, I mean, definitely some good thoughts there from the analysts. Just a few big things before we go into the charts and all that. And we'll discuss here in depth what I think of Snowflake and Datadog. But there's three really important companies that I'm buying right now. So that's what we're really going to get into as well. With the market as a whole, there's a big holding its breath. And if we do end up seeing a rally and really the start of a bull run, it's going to be very strong, especially with a lot of this new technology accepting AI and just moving forward with it instead of holding it back. As the war in Iran becomes more of something that people are used to, that's also going to be an indicator in how the market responds. Now, the Fed has responded and we might see rate hikes. That could be something to negatively affect the market. But let's go ahead and dive in and see the charts today, how the market is actually doing. So if we look at the fear and greed index here, it's at 21. The VIX has also been dropping as well. You can see it was pretty high here on March 6th. It was at 29.49. It's been dropping a little bit, went back up a little bit, but now it's going down. So that's good. If we see more of a 19, 20 level, that would really help soften the markets and increase people's buying power within the market. And that's a big reason why I've been buying very heavily, especially over this past week. When there's fear that's high, it's a good time to buy. Now, looking at the S&P, at the closing bell today, you can see Google was up, Alphabet, Microsoft was down about 1.4%, Meta down about 6.7%, which is interesting because Meta just announced that there's a possible layoff of 20,000 jobs here. Let me pull it up. Okay, so based on the report, so March of 2026, Meta is planning significant sweeping layoffs that can impact 20% or more of its workforce. So that would be equaling roughly 16,000 jobs that might be at risk. As I was hearing about this news, some people were commenting like, oh, you remember those videos of day in the life working at Meta where they're just eating snacks all day? They're saying that those people might lose their jobs. But realistically, with the amount that Meta is spending on CapEx, and a lot of overstaffing, which we saw with the company X a few years back when it was Twitter, and Elon Musk took it over, fired like 80%. We're seeing a lot of that, a lot of restructuring, looking where AI can help with jobs, but also just looking at staff and saying, do we absolutely need you, or is this just an extra position? So I don't necessarily think that's a bad thing, but the markets did react a little bit to that today. As you can see, down about 6.7%, NVIDIA down about 0.5%, Apple about 3.2%. So definitely a lot more red, a lot more in the tech sector today. Amazon bleeding pretty good as well. I'm not exactly sure why. Amazon's a good position, just some short-term volatility. Now, if we look at the S&P overall, it did start a little bit of a good support rally today. You can see going back up to its levels last week, which is good. So we're still sitting at the 6,700 mark, the support level here, which is really good. So just like I said in my videos a couple days back, and I'll link those, as long as we're sitting at the 6,700 level, I don't see any reason why we couldn't start to slowly go on a run. This stuff is going to be normal news. The war in Iran, the earnings have passed, and so we're in the clear for the next month and a half to really just wait for this Fed meeting to pass by. And then once we get to July and May, stuff's really going to ramp up. Let's look at the QQQ on the day here. So on the day, up at 603, up about 2.3, and so up about 0.5%. So again, good news there. Follows very closely with the S&P. You can see that very solid level of 600. So good news again for that one. Now, here are the three main companies I'm looking at and why. So the first one, as we watched there in the closing bell, is NVIDIA. This has been such a home run winner for a lot of my students, as well as in my portfolio. This one, NVIDIA and SoFi. SoFi I got into pretty early. I wish I'd bought more though, as I'm sure everyone has. But if we look at NVIDIA, over the past 6 months, there hasn't been too much movement. And a big reason why is there was a massive run up over the past 3 years. There was 600% growth over 3 years in the stock. A lot of people wanted to jump in on that movement of jumping in tech, getting in on that profit, especially since 2022. And I think this was a significant one where people are starting to feel a little bit overbought. Now, what's cool about this is with NVIDIA's price, or excuse me, not price, but their revenue projections of 1 trillion. I think this is a slam dunk home run position to put your money into to slowly start getting higher and higher gains. Now, do I think this is going to double and triple overnight? Absolutely not. It's grown so much. I think it's going to have significant growth, but I think this is a solid company to have in the portfolio. You can see it closed at 183.19 on the day. Now let's pull up the earnings. So Q4 fiscal 2026. So they ended 2025. So revenue was 68.1 billion. So up 73%. Data center revenue 62.3 billion. So that's a record high. Earnings per share, EPS of 162. Surprising the 153 estimates, and then gaming revenue 3.7 billion, up about 40%, 47% year over year. Financial performance, so we had $215 billion, a 65 increase year over year. Profitability, the company has been massively profitable in its data center businesses, which fueled by high demand in AI software. What's so important about this, the video that we just watched by CNBC, they said that a lot of the lion's share, they said, in this CapEx spending is actually going to go to NVIDIA. And that's a big generation in its goal of $1 trillion in revenue, because they're going to get so much money of that $700 billion. So, I mean, I think this is absolutely fantastic. But let's finish reading here. So the growth driver in the company. So the company is investing heavily in Blackwell architecture, which is driving significant demand. The next earning date is May 20th, 2026. So we're in the clear for a while. And then the stock did a split there. So that's definitely a fantastic position that I'm continuously dollar cost averaging. Now, what is the next one? Next one is Palantir. Now, obviously, there is war going on right now. And I talked about this in my video yesterday. Big fan on Palantir. I've been buying Palantir dollar cost averaging for around a year and a half now. And I wish I'd been doing it longer. Palantir, when it got added into the S&P last year, there was a big run up in the stock. And I think now we're more consolidating. It's flattened out a little bit over the past year. As you can see, not too much growth since around July. So July back in 2025. Okay, a little bit of a dip here out to the 135 range, and then its highs are up here at around 200. I think personally with a company like Palantir that profits when we're not in war, and they also profit even more when we're in war with these massive government contracts, I think Palantir is an amazing purchase. Now, let's go ahead and look at Palantir's earnings. Okay, Palantir, so its revenue was 1.4 billion, a 70% increase year over year. Fantastic. EPS 0.25, exceeding its 0.02. Economic growth surged 137% year over year. Fantastic numbers. 609 million GAAP, representing 43% of its revenue. And then cash flow ended the quarter with 7.2 billion in cash over short-term securities. So overall, a great direction. Now, I personally like to invest in companies that are good companies that already have 2-3 earnings in a row where they're just beating and exceeding expectations from analysts by the own company, and investors tend to rush in these companies when this happens. So if you can find these good companies and just invest in them, you're in a good spot. Another thing on Palantir is you could be selling options on Palantir. So selling a put on option to earn some extra income. If we look at the 6-month chart here, see a good support level at around the 153. It dipped below, came back up and tested that support range. And then you can see right now it's hovering. I think it's very realistic for Palantir to go up a little bit more and then maybe test it again. So selling puts around the 146, 147 range, maybe all the way down to 145. I would do that a month out. If you get assigned, not a problem, but you wouldn't be doing that trade to get assigned, obviously. You can own the shares or control the shares of Palantir without having to own all that stock. So it's 100 shares of 155. By the way, if you guys don't know what options are, let me know down in the comments if you'd like to know more about options. I do sell quite a bit of options, especially in times like this, just to earn some extra premium. And then let's get into the final company. So this is one that I really do like to talk about on the channel. I made a video about it yesterday as well. If you guys haven't checked it out, go check that out. It's SoFi. SoFi is absolutely freaking crushing it. I love SoFi. Now, some people think it's going to go down lower. Great, no problem. Just means I'm going to buy more shares at a better price. SoFi is such an amazing company, and they have such good growth potential with this company. So you can see they've been kind of bleeding over the past few months. Over the year, you can see topping out back in November or end of October at around 31.66. As of today, we're down to about $17.58. So, I mean, guys, like this is like we're having the stock almost. With that being said, SoFi is actually leading in getting this commercial side of their banking set up. This is a fintech company. And so we've seen massive growth in the website visits for both business to customer, so on the customer side. And now we're about to see that growth with the business side, with the introduction of their stable coin to allow transactions to go quicker from business to business. So just think of it, if you're selling your business and you need to transfer funds, it can take a long time. It can be super painful. If you guys have never sold a business before, I've sold land before, and it is just such a nightmare to wait for the money to transfer and it goes through everything. It's very annoying, very tedious. With this transaction style with the coin, because they own it, they back the security, which is amazing. So think of it as an e-transfer or like a Venmo or like a Cash App situation where you can send like 200 million within like 10 seconds, and it's low transaction fees. And this is why I really think SoFi is going to go on a nice run pretty soon. You can see here, it's dipped even lower today. So it's at 17.49 at the close. It's currently at 17.37. So a little bit more of a dip, no problem at all. I think there's a lot of fear baked into this type of company because it had such a big run up. And I think also the CEO, Anthony, has a specialty in these types of situations to really turn the company around. So if you look at the fundamentals of the company, you look at the CEO, you look at what they're launching, what a fantastic company to dive into. So that is the closing bell for today. Can we see a market run up? Absolutely. I really, really think so. It depends on what happens over the next few days. And we're going to keep you up to date on that on this channel. So make sure you subscribe, like it, and we'll keep you updated. Take care, guys.